Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Welcome back, everyone. Every day, all day, AJ's working on making you a better investor. Episode 136, the AJ Brown Show. My name is Cyprian Francis. AJ Brown. Good morning, AJ.
136. Good morning, Sip. That's a milestone right there.
Without a doubt. All day, every day. Well, not all day, because the way that you like to trade is you really work it around your schedule.
I do.
The big news this morning is employment numbers. I feel like that's a big mover on the market. However, the markets are back at all-time highs. So, what's happening? Because I know that the past couple of weeks there's been some pullback opportunities. We did focus on that. Where do you want to begin? Let's go ahead and get your screen up here for us. What are you feeling? What's moving the market? How are we going to advise people here?
Yeah. So again, so everybody's on kind of a little bit of a high. Why? Well, let's look at the economic calendar. I mean, nothing really came in this week except for the fact that number one, people started to see bond yields go down. That's because last week bond yields were up. People were moving their money over to the bond market. And the bond market's interesting. When a lot of people invest in it, the yields start to go back down. So we had a mass influx of cash moving over to the bond market. And then we started to get some hints that things were starting to slow faster than we thought. We got our factory orders. We got job opening labor turnover survey. We got some consumer optimism from last week, all kind of pointing at, hey, things may be slowing. And then, of course, the bond yields, money moving back into the equities market a little bit. We call this like buying on the dip. And then today's employment numbers. Let's take a look at today's employment numbers. So employment numbers, remember the employment numbers survey comes from two different surveys. So people think that the unemployment rate and the payrolls numbers are related. It's actually two separate surveys. One survey to the general public, that's the unemployment rate number, and one survey to hiring, to corporations, that's the payrolls. Payrolls were up more than expected. However, unemployment is up as well. There's people out of work. It's 4%. And actually, I don't know how many people remember taking Economics 101 and 102 in high school and college. But one of the things for a functioning economy is that, and it's kind of is weird juxtaposition of things, but you need to have some people who are earning a ton of money and some people who are unemployed. And through history, that magic number is 4% on the unemployment rate. And guess what? That's where we came in today. When too many people are employed, it starts to make a little bit of a taxing on employers, which we've seen for years, right? We've seen that employers have had to like bend over backwards, and that employees have been quitting jobs and all that good stuff. So this is actually, some investors are thinking this is positive news. We're getting that situation this week where bad news is being interpreted as good news. And yet payrolls are up and private payrolls are up, right? Manufacturing seems to be up. They're hiring. And then here's another negative, right? Participation rate starts to tick down. That's how many people have actually taken themselves out of the job force. So that's a number that I like to watch, just because it's actually been at some all-time lows for like the last 10 years. Having it up more around 65 to 70% means that there's less of a tax on us taxpayers, right? Average hourly earnings up, average hourly earnings year over year. So this could be considered kind of negative, but I don't think that the market's taking it that way, simply because the cost of goods has actually outpaced people's paychecks. So people might interpret this more as, hey, our paychecks are going to catch up. All to say, I don't think that this is a negative or a positive. I think it's in a good direction. But if you take a look at what investors are thinking about inflation numbers, or I'm sorry, interest rate hikes, we're back. You'll notice for June that there's not a bar here for raising. Remember last week, there were some investors who were thinking, oh my gosh, they may actually raise rates. There was one of the Fed presidents who was saying, hey, I'm open to the idea of raising rates. Well, that bar is gone, right? July 31st, that bar is gone. We don't think that there's going to be any rate drop by then, but no more rate hikes are on the table. September is the first time now we're starting to see a clear belief that September we're going to have our first quarter point rate hike. And if I jump to December, now it's getting strong again, kind of equal that there might be 2 rate hikes. There might be a 50 basis point rate drop. I keep saying hike, but let's get that clear. They're thinking there's going to be a quarter point rate drop in September and maybe even a half point by December. So this is causing some interest in the equities market by far. Plus oil prices. Oil prices went down to almost $72 a barrel. They're back up at about $75 a barrel, basically because OPEC came out and made a message that said, hey, we're not going to let the oil prices tank. So prices went back a little bit higher, but they were down at $72 a barrel this week. So this is all good stuff.
So one thing that I saw today, to tack on to some of the employment numbers, this caught my eye, was the full-time versus the part-time, where May full-time dropped 625,000 while the part-time increased. And so I don't know if that could be the beginning of some sort of a longer-term dynamic. And I wouldn't be surprised with some of the automations and things like that. But to go back to your point on the bad news equals good news, and like some of the forecasting, it's shaping up like September, October is looking like it's going to be a crazy time to be an investor, right? I mean, we're getting into the slow months, and mediocre news, a little bit of bad news. Everyone's kind of like, oh, we're going to get a rate hike, even if it's a quarter point rate hike.
Rate drop,
like rate drop. Yeah,
I know. I've been saying that.
The market's like, oh, we got a little bit of a slowdown. Great, they're going to lower rates, send the market even higher. And then when we look at the S&P, you did the retracement analysis, and now it's like, we're back at all-time highs. And how much higher are we going to go? Are we ever going to really retrace back?
Now, before I go into the technicals, I totally want to visit quantitative tightening. I am very impressed, and you're not going to hear me say this very often about the Fed, but I am impressed on their discipline with quantitative tightening. So I'm looking at a year. A year ago, they were at almost 8.4 trillion in IOUs to the market. This is $8.4 trillion of made up money, loaned money to the market, right? And it is down as of now at about 7.2. So if they continue at this rate, at this clip, by the middle of 2026, they'll be down to their target of around 4 or 5 trillion. And when they stop the quantitative tightening, that's going to be significant. So I'm quite impressed on how they're doing. And I hope, actually, if things are going as well and they keep at this clip, that they even get it below their target of 5 or 4, $4.5 trillion. But this is shaping up to be a good 2 years. But now, go.
It seems like it's easier for them to do this when the market's just like cranking away, right? Like nobody's really looking at those numbers.
They should totally take advantage of it. And I do know for a fact that, one of the reasons why they're able to do this is For some reason, Japan is coming back online pretty heavy duty, and Japan is looking to store a lot of their surplus, and they're doing it by buying U.S. bonds. So that's offsetting the quantitative tightening. And it's not bad to have Japan as a partner, in my humble opinion. And China, for whatever reason, has been pulling out of the U.S., which is fine. If Japan's going to pick up the slack, I think it's better to have that kind of dynamic going on. So, but should we look at the charts?
Yeah, because all-time highs. I can't believe we made it back up here.
And so now here comes where AJ turns into a wet blanket. Let me. So you're seeing my moving average conversion, not my moving average conversion, my moving average indicator applied to this chart. And I've got let's pull up this is free for you guys, by the way. So you ought to go download this thing. You can apply it to the Thinkorswim. And then I just got access to the Metastock, and we're moving this over to Metastock. So if you're Metastock users, you might as well go and sign up now so you have access, and then check back and you'll see your Metastock. But here, whenever I analyze the broad market, I like to use my 3 and 5 day exponential moving averages, and I like to apply some filters. You can see I've got my 1 bar reversal filter on, and that makes sure that when I see a crossing, it's a real crossing. And so you can see my 3 and 5 day EMA, and you can see where the arrows are crossing, and you can also see where the arrows ignore the crossings when they're not real tried and true crossings, which is what we want to be seeing here. So we just got through talking about last week where we had seen a top reversal. Let me go ahead and overlay my retracement analysis here. So let me turn off my moving average lines so you don't have to be distracted by those. And then let me come over here and pull up just my basic analysis here. So we had that pullback because we had gotten a top reversal on May 21. And last Friday, we were talking about how far would we pull back. Well, we pulled back to May 30th. So we literally only pulled back, just like we did last time, just a few days. And now we're back going hot again. All right. Let's even go a step further here. Let's actually pull up our rulers and zoom in a little bit. I'll zoom into about 3 months here. I want to pay attention. Last week, we were talking about how far we would pull back. And I was talking about pulling back into this magenta zone, pulling back into this red zone, or even pulling back into this lower green zone. Well, the last time we kind of missed our pullback was, let's go back a little bit. Hang tough here. So right here. So right here, if you take a look at this, I mean, I don't know if we can even, you can see that we did not pull back enough. And I raised some alarm bells when we didn't pull back enough before we started to go higher. And what happened was we went higher and then we started a downtrend. We actually collapsed after that. And what I had said, and what I'm going to say again, is when you don't retrace enough, you actually don't get enough of people's portfolios to churn to get them in a place to start buying again. So what you start to see here is a lot of money flowing into the market from external, from people who are pulling it out of their mattresses, who have not as much experience in the market. And that's kind of starting to get a little bit dangerous. We saw a whole run up of that. And I have to kind of both credit and what's the opposite of credit? Shake my finger at NVIDIA, right? NVIDIA is one of those stories that just won't end. And everybody and their brother is talking about NVIDIA and the AI play, right? Especially since Elon made that announcement, Sip, and he's like, I'm going to start pursuing AI big time, and I need to buy some NVIDIA chips, which then gave a big chunk, big push up to NVIDIA. And I'm hearing people that otherwise would not be in the markets talking about taking money out of their savings and buying NVIDIA. And so, that's great for NVIDIA, and it's causing like the NASDAQ 100 to shoot up. But I think it's creating this situation that may not be good for the medium to long term. So let me zoom one more back into my analysis. So I'm a little bit worried that we didn't even pull back into the magenta zone before heading higher. We're already higher than the previous day high. In fact, we're more than 25% higher than the previous day high. I feel like we're setting ourselves up for another collapse. So I just wanted to throw that out there, that this current, all-time highs, I feel like we're a little bit under pressure. We're oversold. We're overpriced. I know I say that a lot, but the charts don't lie. Last time this happened, we went up. Yes, we went up, but then we crashed for about a month and a half there. So I'm actually expecting us to stay more with the chop that we've been seeing since the end of March than really getting much higher than 5,350, which is where we are roughly right about now.
And we'll cover NVIDIA a little bit later. And you're right. That's a lot of the news that I'm seeing, is that the major markets are being pushed by just a handful of names. So it's not really the 5 S&P 500s that are making, it's just a few of those names that are leading the entire, which could be leading to a little bit of misconception. However, we are a little bit of Debbie Downers here, and that's okay because of your approach to the markets and using options as a tool. When the fear starts to kick in, you're there to start collecting a little bit of that premium, earning an income. And just to follow up, the link to the indicators that you were talking about is in the chat. We've also got it there in the scroll bar if anybody wants to get that in their own portfolio or their own trading software.
And here's a little something for you guys. When you go to get that free indicator, basically what we're going to be doing is giving you free access to our web portal, right? And that's where you can pick up those free indicators. But I've got a whole bunch of other little bonuses in there that I'd love for while you're in there downloading your indicator, that you take a moment and check out. And one of them is this index stats area that we update every evening. And this gives you kind of, I want to take you through this. I'm waiting for my magic marker to load up here, but while it's loading up, it gives you the big three right at the top. And so you'll notice here that the NASDAQ composite is just kicking butt this week. This was as of yesterday's close, 2.62%. But what you can do is then scroll down to these sub indexes. There's my magic marker. You can scroll down to these sub indexes. And so you can get an idea when you see the S&P 100. What I want you to think of right there is that these are your large caps. And then your S&P 400, think of those as your mid caps. And then these two guys down here, the S&P 600 and the Russell 2000, this is when you're looking at your small caps, right? So I'm not asking you to do an in-depth analysis, but it's always good to know when you see the market going higher like we are right now. You see, even the Dow is up, the NASDAQ's really up, the S&P 500 is up. If you dig down one step further, we can see that that's being driven by the large caps, the 100 best stocks out there, because the mid caps and the small caps aren't doing well at all. So these large caps are taking the market higher. It means that people are putting their money into NVIDIA. They're putting it into Google. They're putting it into, the big companies. And the writing is on the wall. When people put their money into the big companies, and when we see things like gold prices and Bitcoin prices going higher and higher, people are starting to think, where can I put my money in the long term for safe plays? Still, there's a little bit of appetite for risk, especially with the NVIDIA play, but people are really putting their money into long term. So even though the market's booing up SIP, it's booing it up because people are putting money into those big companies, not the little companies, not the speculative plays, but the big companies. And everybody has access. If you go and sign up for my free indicators, you have access. You could keep track of these small caps, mid caps, large caps, as well as the big three every day just by logging into our web portal.
That's right. And the link to that, once again, is in the chat. At the same breath, I want to invite everybody to AJ's daily workshop. We've gone ahead and thrown the link to that into the chat as well. Later throughout the show, AJ is going to be breaking down some of his option strategies, approaches to marketing, to using these tools. And if you're new to that type of investing, if you want to learn more, head on over, sign up. He's got 4 great strategies to get you going, or just continue to watch the rest of the show and we'll get AJ's pick of the week, which is usually some sort of a similar play to one of these strategies. We've got our speed round, and I want to ask you about Roaring Kitty. So let's go ahead and take a break, and we'll be back in a few minutes. Sit tight, folks.
You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So, have you been in tune with the Roaring Kitty GameStop news this week? Has that been hitting your radar?
I mean, he came back out of a long time retirement, but tell me what's going on.
Well, so you've seen the Netflix movie, right?
Yeah.
The whole fiasco in the past with GameStop and all that. And then he seemed to have gone offline for 3 years,
3 years,
something like that. And then he posted a cryptic, something cryptic, right? It wasn't even like anything GameStop related. It was like, oh, this guy's finally back. And then starting like maybe last week or the week prior,
it was like 2 or 3 weeks ago, right?
Yeah, he posted a screenshot of his position of like, I don't know, like $115 million GameStop options position that I think has like a the price has to close over like 2021 or something on June 20th. And then he's been posting those screenshots. Like, let me see if I can find one. But to that tune, you've got GameStop up. And I mean, what are your thoughts on what you see just taking the news out of context?
I mean, he is in the money. He's created a self-fulfilling prophecy here, and I hope a lot of people are bumping in. He's really, for all those traders, the big money traders, hedge fund traders, he kind of got them 3 or 4 or 5 years ago with their short squeeze. He put some people on alert, and not only that, with all of the books and the movie that came out that kind of showed how and I gotta say, I love how that guy that was in Superbad, Jonah, how he's rebranded himself not only as a comedian but in roles that are quite dramatic. I found
the screenshot here.
Oh yeah, let's see. Wow. That's awesome.
Right. And so I think the wrap up here is he's owed 5 million shares of GameStop at 120,000 call options at a strike price of 20, expiring on June 21st, which is options expiration, right? But if you go back to your chart, I mean, could it go under 20? Like, could this turn into a losing position?
I mean, not right now. I mean, if he gets his if he gets to exercise that option and buy GameStop shares at $20 with it currently trading at $37, I mean, that's fantastic.
We were under 20 just a couple days ago, right?
Yeah. But and it's not like his play. He could raise some regulatory alarm bells just because he has such a presence, but anybody could have done that. And it was trading around 20. So it made sense that he bought $20 call options. But, he's got the following. And I don't think people know what to do with individuals who have a following, with influencers that have that kind of following. But they all jumped in behind him and they buoyed the stock price up, which makes his investment a no-brainer, right? It wasn't even speculative. And so that's just he's
I have
he's
a question.
totally doing what the big money people have been doing to us for years.
So I have a question. So, like CNBC and the news heads like to bring on the SEC chair and this and that, and they're like, is what Rory Carey doing illegal? And is there anything illegal in putting on the trade and then putting a screenshot and posting it on the internet?
Yeah, like here's how I think about it. A mutual fund guy, right, who has a whole bunch of investors investing in him, a mutual fund guy, a mutual fund manager who has, I don't know how many people investing in his mutual fund. He goes and places a trade just like this, and then he tells his other mutual fund manager peers that he sees at the Harvard or at the Yale, club there in New York, what trade he's pursuing, and they do the same thing, right? Well, what's the difference between doing that and telling all of your followers? Aren't investors in your mutual fund a follower, right? So what's the difference between doing that kind of trading and telling your peers versus doing the trading where you tell your peers over Reddit? I don't see how they could differentiate the difference between him and the mutual fund traders. And if they do, boy, will that just open up the curtains to kind of the double speak that happens in Wall Street.
It makes me think that AMC is next. You want to pull up AMC? Like, I just feel like they're like, well, why not we
AMC.
just go down the, get our second name out there running.
Yep, AMC is no longer considered a penny stock because of what's going on. It was trading down even as low back in April. It was down at $2 and almost 25 cents, and now we're back up at $5.52. So, all of those stocks that he highlighted years ago, I mean, they're still getting what's interesting to me though is and just because I have some friends that are still in the big money markets, a lot of the short activity by big money investors, hedge fund, pension fund, mutual fund managers, they got the lesson. And so they're only shorting. They're not shorting for the game of it like they were. They're shorting when they know that a company isn't run well and looking like that. So the short money's out of it. So you're almost wondering, what is the dynamic on the actual funding of the company, right? Because that's, if we go back to the basics, if we take away the derivatives and all that, companies go public in order to get investment dollars to run their company. So is GameStop and AMC worthy of all this investment dollars? I don't know.
So, fortunately, our show's on Friday, and we'll be live on options expiration on June 21st. So we'll check back in and see where GameStop is, because I know it's going to be all over the news.
Let's dog ear that for sure.
All right.
And the other question is, Sip, will he turn around if he acquires them at $20? Will he keep them in his portfolio at that low cost basis, or will he turn around and take the immediate profit? That, I think, would raise eyebrows if he turned around and took the immediate profit rather than just acquiring it in his portfolio at that low dollar value.
Okay, it sounds like we're setting up for a sequel to that Netflix movie. So we're watching it live, and it's exciting. Okay, before we head into your pick of the week and our speed round, you are speaking later today at the at a Traders exclusive event.
Yeah, Dan Passarelli with the options service that we had on our show. He puts on that Traders exclusive event.
And so that's 4 p.m. Eastern, 1 p.m. Pacific time. You'll probably be going into a little bit more detail on stuff, aside from what we do here on the show. So
I got some fresh examples.
If you've got some time today, we're going to go ahead and throw the link to this in the chat. Head on over there, sign up, show us some love. AJ is going to be closing out. It looks like a lovely day of presentations. So go ahead and add that to your calendar.
I like being last on a Friday, Sip. That means that the people, first of all, I'm last, which means that people are going to remember me. But second of all, if you're there on a Friday afternoon, you want to learn. And I'm going to be teaching this evening. So free lesson.
That, and you always have a little special surprise.
I do.
Because you're last. So people need to show up and see what that is. All right. We're sitting on the edge of our seat. What's on your radar? What are we looking at? Where are opportunities? Your pick of the week this week is Mattel.
It's Mattel, the toy company.
The toy company who's now in the movie business, right?
Yeah.
Ticker symbol MAT. Boring, but an opportunity.
Yeah, absolutely. I like companies like Mattel. Here's a 6-month chart. Here is a 1-year chart. Notice that Mattel, over the last year, let's even go further, 2 years. They're always trading somewhere around $17 lows, maybe as low as $16, up to highs of $23. That's 2 years. Let's go back even further, just for the heck of it, 10 years. So now each one of these bars is considered a month. There was a time there where Mattel went down to about $10, but for the most part, looking over the last 10 years, Mattel stays in this range between about $16 and $24. And I like that. And by the way, for those of you that are curious, what we just did is called a fractal pattern analysis. We look to see, is the same pattern visible in a symbol over different time periods and different bar lengths. And that's a powerful tool that I talk to my people who... All right, I've moved us back to a 6-month daily chart. The other thing I'm going to do is I'm going to switch us over from using my free moving average crossing indicator. I'm going to switch us over to using my Shaken Oscillator indicator. This is just the normal Shaken Oscillator, 3 and 10. I'm not applying any of my filters, just plain old Shaken Oscillator. You don't even have to use my indicator, although it makes it easy. You could actually have the Shaken Oscillator floating down here in one of those other patterns. But you'll notice my Shaken Oscillator tells me when I'm topped or bottomed. I'm waiting for it to give me this bottom signal. We're trading around 1750 to 1775 right now. This is a great price to buy into Mattel. And so I want to buy into Mattel, whether I buy stocks or we have an alternative. We can jump over here to our option chain. And if you don't actually want to buy the stock, and you might not want to, Mattel doesn't offer a dividend. If you don't want to actually be into the company because it doesn't make sense to actually own the stock, then you could probably do pretty good buying the Mattel $10 call, expiring all the way out in January of 2025, roughly about 7.5 months from now. So this $10 call, it's trading about $8.15 right now. It's about just under half the price of Mattel stock. You could do this same trade, with this. This is what we call an option, just about trading at parity, meaning if Mattel goes up $1, so will this. So you've already got some leverage. If Mattel goes from 1770 up to about 1870, then this $8.15 option will go up to $9.15. So you're getting the same movement, but on a lower, break-even price thing. So I would consider that back month option. And so I'm not going to do that today. I'm going to wait for my signal. This shaken oscillator is an end of day signal. So you come back, you look at Mattel with my indicator or with the shaken oscillator applied, and you wait for the evening where you see this crossing, you see this yellow arrow appear. And then the next day you look for the follow through. Is everything moving the way you want to? I would even wait until the afternoon or the evening, we call that last hour of trading, professional hour. Make sure things were moving. We're looking for a bottom reversal. So make sure on the day of trading, things are going up, right? And that's when I would buy some of this stock or buy some of those substitute options. And then the beauty part is you can let that thing appreciate, right? Which is great. But if it stops somewhere, and I would say stopping somewhere shy of about $21, if it stops going up somewhere shy of $21, this is our opportunity to then sell premium. And this is what I'm all about, because when we sell premium, we create an income stream. We basically rent out this stock or rent out this back month option. We give people the opportunity, like the people gave Roaring Kitty the opportunity to buy this particular GameStop. However, with Mattel, if we go ahead and sell our premium at that top, the likelihood that somebody will come back and exercise, basically want us to give them their stock or give them this back month option, will be pretty minimal. So instead, we get that premium, we get that money that people give us for the opportunity to buy that stock or buy that back month option from us. And then it gets to the expiration date and they decide not to, right? And so we get to just keep that money and do that over and over and over again. And that's why we can create income out of stocks that seem like they're just sideways, choppy moving, like Mattel. But I'm getting ahead of myself. The first thing we want to do is buy it when we know that it's bottomed out. So we'll wait for that end of day signal. We'll wait for that next day follow through, and we'll either buy the stock. If you're going to buy the stock, buy it in lots of 100. Or if you're going to do the option contract, then you buy that back month option, that January $10 call.
And it seems like Mattel is one of those classic companies that has very stable business streams, revenues. They're not so much impacted by technology, AI, things like that. And having a name like this in your longer term portfolio,
not a bad idea.
Taking advantage of the dips, at least when you have a run up. Yeah, especially they have like a slate of like 5 more movies coming out that are similar to Barbie, so I could see that being a nice little driver.
Yeah. And what I like about Mattel, my program participants and I took a really close look at Norwegian Cruise Lines yesterday. That might be one you guys want to take a look at offline, because we found some great opportunities. But one thing about Norwegian Cruise Line is every time they go, and have their statement around their quarterly earnings, they have their quarterly conference call where they tell investors what's up. Their stock goes crazy for like 3 or 4 days, right? And it makes it difficult for us to want to trade our covered calls or our diagonal debit spreads against them, because it just creates like a week or two of uncomfortableness. Mattel doesn't do that. The earnings keep us right in that same, $17 to $21, $22 range. So we love it. It's smooth sailing. It's an ongoing instant income generator for us. So why not? And like you said, doesn't hurt to have a long position in Mattel.
and we're not ready to pull the trigger yet, like you mentioned, but this is probably a great name to add to your watch list to see what's going on a daily basis. All right, AJ's pick of the week, Mattel, ticker symbol MAT. Let's head into our speed round, and I'm excited for this first one. This is June in Singapore. Interested in the hottest name on the street, NVIDIA, ticker symbol NVDA. I'm thinking, when did we start talking about NVIDIA? Like back in the 500s, 400s?
We sure did, and it's been on our watch list for Trading Trainer, our program, since they started to make chips for gamers, right?
That's right. We talked
And
about
then
that.
then people found out that those graphics chips for the gamers were great for crypto, and so NVIDIA pivoted heavily into the crypto world when mining was like the talk of the day. And then now they're in the AI world. We figured out that their technology is the technology to use for these AI language models. So that's great. Okay, so we always worry about buying at a high. Here's my scoop for you. First of all, NVIDIA announced a 10-to-1 split, which is nice because I've been buying NVIDIA for a while now. And so I think I have like 80 shares and it's going to become 800 shares. So that's good for me. What's good for you is it brings NVIDIA price down. So I almost am going to urge you to wait for that split to happen. I can't remember the date that that's going to happen, but let's let NVIDIA drop down in price. And then I want you to be strategic on how you add NVIDIA to your portfolio. I don't want you to just keep going out and buying it, right? I would like you to use our strategy called cash secured put selling. Cash secured put selling. In fact, I was looking through the free stuff we give people who come to get our indicators, and I noticed one of the free things that we give you is a short 5-minute video course I created on how to do cash secured puts. So that's another reason you want to go get a free account to our portal to download those indicators. Is you want to, while you're in there downloading the indicators, watch my free little short course on cash secured put selling. What it means, just in short, is that every month, or you could do this every week, because NVIDIA's got a very healthy options chain. So you're seeing, I'm looking at the monthly options here. You can see June 21st, July 19th, August 16th. As Cyprian hinted at, options expire, the monthly options expire on the third Friday of every month. But you could, if you totally wanted to, you could use this strategy. I'm pulling up my expiration dates and I'm removing the filter for monthly only. And if we come back, now you can see you could do this every Friday, right? There's a June 7th, a June 14th. And like I said, NVIDIA has a lot of people not only investing in the stock, but investing in the options. So you should have no problem with this liquidity. And here's what you do. You go over here to the put side of your option chain, and you basically say how much you're willing to pay for a share of NVIDIA. So right now, NVIDIA is trading at about $1,200. So if we come over here and limit ourselves to, say, strike prices around the 1,200 mark. So say you're only willing to pay $1,170. You already want to have $30 of built-in profit into your position if you buy this thing. Well, if you agree to buy NVIDIA for $1,170 between now and the end of today's trading, right, June 7th, somebody's going to give you $1.24 per share. So $124 for the contract. Make sure you have the $1,170 per share. And remember that options are sold in lots of 100, right? So again, I would wait until we have our split down 10-to-1 so that the price is down. But I'm giving you examples with what's live right now. But that's how you do it. You basically dictate what you're willing to pay by what date. And it's going to be every Friday. And here's the good thing. If you get to the Friday, so now I'm looking at the ones for next Friday. If I get to Friday, and in this case, they're willing to pay you $35.80 a share if you go with the $1,190 buy price, right? If somebody during that week, next week, decides they don't want to sell you their stock at 1,190 and you get to that Friday and nobody gave you their stock at that price you were willing to pay, you get to keep the $38 a share. So you might as well just do this over and over so that you always get the exact price you're willing to pay and you get paid to do it. I would be very methodical on how I add NVIDIA to my portfolio. I would always try to get the best price I can and get paid for placing those orders. June, that's how I would attack NVIDIA, and I would just add to my portfolio little by little using this strategy. In fact, that's what I'm doing, right? And I would hold NVIDIA at least for the medium to long term. It doesn't seem like a bad play. It hasn't been a bad play for the last 20 years.
Yeah, and it seems like Amazon did something similar, right? Amazon shot up to about 1,100, maybe even a little more, and they did like a 10-for-1 back down to like $100 a share, and it's kind of chugging along, in that range now, which is probably good for the business because it lessens the fluctuations of, market cap and like, the actual valuations. And then it allows investors, obviously more investors, to get involved.
That's right.
I did have a question while you were describing that, because I think it is a 10-for-1 split. What happens to the chart? Like when they do that split, is the next bar just going to be all the way down at 100 and we just have this big gap? Because I don't remember.
Usually you'll see down here, you'll see the split 10-to-1 on June 10th coming up. By the way, it's June 10th when that's going to happen. Usually what most charting companies will do is they'll back scale so that all the data goes down 10-to-1. They don't just have a chart and have it drop. They actually scale back, and they put this note here that there was a 10-to-1 split so that people who are looking can go back and infer. And more than likely, it's always a little different each time there's a split or a reverse split or a dividend. But I think with NVIDIA, what's going to happen is if you own, the strike prices will recalibrate as well for your options if you're in any of these plays.
NVIDIA, the talk of the street.
It makes sense for companies like NVIDIA and Amazon and Apple, more for NVIDIA and Apple, because they're in the news and there are actually people, I questioned why it was necessary for Amazon. I'm not sure it was the best strategic decision, but you're right. You can lower the price, making it more available to people. And the reason why like an Apple and an NVIDIA might do that is because they know that their users are like very loyal fans and would be interested in becoming also shareholders. So they do that in order to bring in their fans, their loyal fan base, which may not be able to afford this much money, right? With an Amazon, I always questioned, I use Amazon, but I almost use Amazon because it's the best out there. There's no competition, but I'm not a fan so much of Amazon. Like I am a fan of Apple, right? I am a fan of NVIDIA. I've been mining crypto with their chips for years, right? But I'm not a fan of Amazon. I'm just a user. And I'm not sure if Amazon, the users were that excited. They have such a loyal fan base. I don't think they saw the same uptick in buying that like Apple did when they did the 10-to-1 split, or maybe it was an 8-to-1 split. They brought their stock price down to a place where their fans could afford it. I think we're going to see that in NVIDIA. I think strategically, by doing this 10-to-1 split, NVIDIA is going to open the doors to get even more investment dollars in.
Well, I just hope some other names can benefit from the interest in NVIDIA, because it is definitely outrageous.
It's bringing up the whole tech sector. So, yeah.
All right. Thank you, June, out in Singapore. Let's move on to our second name. You did touch on a cruise line. This is a different one. This has been in Miami, Florida. Carnival Cruise Line, ticker symbol CCL. We've mentioned this name a handful of times, and it looks like we may have a buying opportunity.
Maybe, or shorting opportunity, actually. Let me, I'm going to turn off my Shaken. Shaken, I think, would have been good for my Mattel. I almost want to go to what I call my fast MACD. One of the benefits, by the way, of using my indicator, my free indicator, is that you can have the MACD calculated on alternative prices besides just the close price. And I like where, VWAP exists, I like having the MACD calculated on the volume weighted average price. So that's makes my indicator makes it really easy. So I've got VWAP, I've got my fast and my slow 619, all exponential. My MACD average is 3. So this is the fast MACD settings. My only tweak is that it's calculated on VWAP, not on close. And then over here, I've turned off all my other little filters. I don't need them for actual trade signals. All right, so I like this. So again, Carnival Cruise Lines kind of chugs along. People love cruising, but at the same time, not really going to change from being a sideways choppy. You don't really see much happening with this stock for it to, what could they do better or worse? I'm not sure, but they seem to be in this nice little channel from about 14 to 17 dollars. I want to see if they get a little higher, maybe 17.50. And I'm waiting for this signal. So I'm waiting for one of my magenta arrows. Again, end of day signal. I'm not going to be looking during the day. If I get a magenta signal at the end of the day, then the next subsequent days, I'll be looking for some, selling off during the day. And if there is selling off in the day, then maybe I'd be interested. And what I would probably think of doing here is doing a little bit of shorting of Carnival Cruise Lines when they hit that top. Not today, when they give us the magenta arrow followed by sell off. And I would not be, shorting it for the long term. I'd be shorting it in order to sell premium. In this case, instead of selling calls, when you short the stock, you sell puts. And so you short the stock when it's kind of at a high, and then when it dips back down and gives you one of these sky blue or cyan or whatever light blue color arrows, when it gives you one of those light blue arrows, you sell a put. You go ahead, sell a put. You could even buy a protective call, and you can create these income streams off of these sideways moving stocks that are just so reliable. It's just based on time passing by every third Friday of the month. Or again, if you're doing weekly options every Friday, you can create a little bit of added income into your account. And you do this with 7 or 8 positions, and the added income starts to add up to the point where you could be like me in 2005 and, quit your job because you earn enough income off of your portfolio that you could live on that for the last 20 years, which is what I've been doing with me and my family.
And trading at 1656 compared to NVIDIA, you definitely have a little, or it's definitely more palatable for the variety investor. So
absolutely. In fact, if you're going to short something, you're going to need something called a margin account. But you could do this in your retirement accounts. And this is how you do it. And I'm sorry to go on a little bit of a tangent here, Sip, but I want to tell people that you don't have to be opted out if you're doing this in a retirement account and you still want to take advantage of shorting. What you can do is buy some of these back month put options. And the put option that I'm targeting here is probably this $22 strike price, expires on January 17th of 2025, and it's a put option. It's currently going for about $5.70. You'll see when you get your signal what it's going for. But not only is that cheaper than the stock, but you buy this. It's a cash account deal. You do that instead of having to need margin in order to short the stock. And it acts, like I said, dollar for dollar. But here's how it works. if Carnival Cruise Line goes down $1, so it goes from $16.55 down to $15.55, this option will go up $1. So it goes in the opposite direction. You'll have bought it for $5.70. It'll be worth $6.70. So, and it acts as a tantamount covering position for when you want to sell put premium. So they're alternative. This is called an option substitute. And I would take advantage of that. And you could do this in your, IRA or your Roth IRA or whatever retirement plan where they limit you to cash only trades.
We really love the cruise lines, and I don't think anybody's mad about that. So that's Carnival Cruise. Thank you, Ben. Moving on to our third and final name. A little bit more of it on the exotic side, in my opinion. This is Amy from Louisville, Kentucky, interested in DraftKings, ticker symbol DKNG, whose advertisements and banners I practically see on every sporting telecast.
Yeah. Interesting, and a little bit on the speculative side, just because, you hear about DraftKings and you hear about, that they're being watched a lot by government regulatory groups. And so keep that in mind that, something as good as DraftKings could actually collapse on you at a moment's notice. We have these thoughts in the back of our mind as well when it comes to like pharmaceuticals and things like that. So I would group that in here. But at the same time, look, DraftKings has been on this wonderful move up over the last 18 months, and it's actually pulling back a little bit. And so, gosh, this is like a swing trader's delight. But I wonder if we could also put in a little bit of put it in so that if it doesn't work out as a swing trade, we could turn it into a premium trade. Let's see if we can structure that, Amy. Follow along here. Let's come back into a 3-month chart. So I just got a signal on Wednesday night signal. Let me see. It looks like Thursday we got that follow through that I'm looking for. Let me just, I'm going to pull open a chart and I'm going to look at yesterday's price action. I'm going to pull over the chart that appeared over here on this other screen. And what I like to look at is intraday price action. So I'm going to change us from looking at daily bars to actually looking at 15-minute bars. And I'm going to zoom in to yesterday's price action. And so what I look for is first of all, I don't wait. I wait until the afternoon or even better, the last hour of trading. And what I look for is, number one, that price is above the previous day close. And then number two, this is a little day trader's trick. I make sure that price is above the high of the first 30 minutes of trading. So you can see that in the afternoon session, man, we beat both of those criteria. And so if I had set up my automatic trader, or if I had come in at the last hour of trading, I would have purchased some DraftKings stock, or if there was an option substitute, I would have gone ahead and purchased that option substitute. And you could probably do that today, or you could probably do that, Monday. It doesn't look like there's much price action today or on Monday, but basically we got our buy signal, and, now you're set in order to profit on this thing swinging up, right? Let's set ourselves a criteria where we might convert this into a premium trade. So if it swings up above, gosh, let's say $50. If it swings up above $50, once it tops out, we're going to take our profits and move on to the next trade. That's our swing trade. If it falls short of $50 and starts to reverse and come back down, That's when I'm going to convert this thing into a premium selling trade. I'll sell some call options at whatever, reversal price there is, and I'll start collecting income on this until indeed it does swing above the 50. And that's what I'll do. I'll do that month after month until it does actually swing to the point where I'm ready to get rid of that initial stock. So set up the swing trade, buy the stock, or you could buy a substitute option. And do you have to go so deep in the money as we usually do for sideways choppy symbols? I would say no. You could probably, let's actually take a look. This will be the last thing I do. I know that we're already well over our time, but I would look over here at DraftKings and I would probably go with the $30 strike price. Yeah, I like that $30 strike price. It's currently trading at what, $10.28 a share. So you could totally use a little bit of leverage. That would be good for the swing trade. And again, if the underlying symbol falls short of 50, then I would go ahead and start selling calls against this.
Yeah, I've always been a fan of DraftKings like user interface. Like they make it very easy to gamble, which is probably good for their business and not so good for everyday folks who maybe shouldn't be gambling, but that is the world that we live in now. It's at your
Well,
fingertips.
and let me throw one more thing out there. If you're swing trading and you get up and you get to the point where it starts to reverse short of 50, meaning you're going to be in this for a little bit longer than you had thought. Every time you sell premium, consider buying a protective put. With a strike price down near your break-even price, so maybe the $35 strike price. It'll be cheap insurance, but like I said, just should something happen to DraftKings that causes the price to dip down below where you bought it, you'd be covered, right? That protective put would indeed offset any losses of the stock or the back month option that you bought dollar for dollar. It's cheap insurance, and I would put it on and I would roll it out every time you sold a call. So keep that in mind. Doesn't hurt to put that protection on. You could even turn it into an additional kind of bonus income stream. I talk about that in my pre-recorded webinar, and I'm going to be talking about it. SIP is showing where I'm going to be speaking tonight. I'm actually going to talk about that specifically tonight. So if you can come live, you could even ask some questions on my live presentation. I'd love to have you there, and it's no cost.
Yeah, and if you can't make it, I'm sure if you sign up, there will be a replay made available. So head on over to the sign up page. The link to that is in the chat. AJ is going to be speaking in a couple of hours, and yeah, we're heading into June gloom, as they call it over here in my neck of the woods. But the market isn't looking too gloomy. Looks like everything's flat right now, coming off of those unemployment numbers. So AJ, heading into next week, anything on your radar? Anything we should be being mindful of as we begin the trading week next week?
A lot of people have been sending me messages about our VIX trade, and my VIX trade simply has to stay above 12. I'm not worried at all. If it stays above 12, it's a break-even trade. We're just watching it, and this is how the VIX trade works. A couple months ago, the VIX trade totally paid us big time. This time, it may just break even, and it's coming down at another low. We're actually looking into the future. Don't worry. Just let this thing roll out, and we'll do the next one next time. In fact, I'm not even that concerned because my expiration, I don't know how folks did it, but my expiration on the VIX trade is not till next Friday. And looking at the SPX kind of, stalling, I don't think we're going to be that bad after all. So just take your hands off the arms of your chair, let the blood flow back into those white knuckles, and it's doing what it's supposed to do. Just chill.
Just chill, hang out,
Just chill.
enjoy the weekend, get some exercise, grab some sunshine.
Yeah.
I know that some parts of the country are extremely hot, so maybe try and cool off in those areas.
Yep.
But man, we've run through some really good names today: Mattel, Nvidia, Carnival Cruise, DraftKings. Man, packed show, and we appreciate everybody tuning in. We appreciate you joining us here today. And if you're there in front of your computer, show us some love. Hit that like, hit that follow, hit that subscribe button. If you have any questions along the way, feel free to send us a DM, leave a comment. Head on over to the website. The links are in the chat. Grab some of those free indicators. Sign up for AJ's webinar tomorrow. Otherwise, I think
tonight.
Oh yeah, for tonight. Sorry. Otherwise, that's all we got for today.
That's it. Episode 137 in the bag.
137 next week. Hey.
Oh, geez.
All right, everyone. We'll catch you guys next week.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to trading.com and create a. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.